Well, first reading in terms of the margins as well as the profitability seems to be a beat, Mahima, because we were going with a number of 3,978. The number in terms of profitability has actually come in much higher at 4,500 odd crores. Revenue, as you rightly said, is a slight miss, but it has to be noted that this quarter included sales to be largely absent between 15th August and September 22nd. Given that impact, the revenue largely coming in at 33,400 crores versus estimates of 33,800 crores. We'll probably give it a little bit that to the company. In terms of margins as well, 14.2 is what we were going with. They've come in at 14.4. And this is very important because, they had the highest sales of electric vehicles in this particular quarter. That impacts the margins in a negative way. So despite higher EV sales, they have been able to actually maintain margins, while profitability on the other side have also come in line with the estimate that we were working with. So number seems to be at least in line with all the four numbers that we were going with. Profitability is a big beat, and a margin of 14.4% is something that the street will take with both hands.
Puneet, thank you so much for bringing us those details. In fact, the press release has also come out. And overall, if you take a look at the ROE number, that's at around 19.4%. SUV's market share at around 25.7%. LCV's market share at around 53.2%. Tractors market share at 43 odd percent. And we have Naveen Kulkarni, Chief Investment Officer at Axis Securities, joining us now. Naveen, your first take with regards to where M&M numbers stand. PAT margins a beat, but revenue a slight miss.
Yeah, so revenue, I believe there is a slight miss, but I think we'll have to get into, let's say, the product mix that could have resulted in that. But more importantly, when we look at quarterly numbers, we look at the margins because anyways the monthly numbers are out, so broad volume numbers are already known. Realization something which we can discuss. But more importantly, what we can see on the EBITDA margin number, which is at 14.5%. Plus, let's say the absolute EBITDA number is also a couple of percentage points beat, and then of course the earnings is a beat, right? So margin plus absolute EBITDA plus earnings beat, I believe these are decent set of numbers, in fact good set of numbers, and probably could warrant some kind of upgrade in earnings estimates, considering we have entered a strong quarter of Q3.
Naveen, so basis the numbers that have come in so far, when you talk about M&M as well, the first cut looks okay, but if you have to look at the trajectory and the commentary that has come in, what do you make of that? You're talking of a revenue growth of around 21% in this quarter. What would you advise investors to do with an M&M at this point in time? Because strong growth coming in terms of the EBITDA as well as we speak.
Yeah, so the only challenge that we tend to see with M&M is that it's not cheap, right? So from where it was and the kind of valuations that it is trading at, it's slightly expensive. That's the only challenge which is there with M&M, right? So if I were to look at the market capitalization, it's like 4.5 lakh crore for a company which probably is the third largest player in India, right? So from that perspective, probably the valuations seem to be stretched, but they are delivering consistently, one, on volume growth, second, on earnings and margins, and third, of course, the internals in terms of product mix, in terms of new product launches. I think M&M is heading in the right direction, right? So only thing is that from here on, if earnings upgrade do not come, then the stock could be a little more sideways. But otherwise, if we see earnings upgrade consistently, the stock will continue to deliver above market returns.
That's an interesting commentary, Naveen. Thank you so much for joining in with your first cut.